Well, I'm about ready to bring on somebody really exciting, but most importantly, he's the author of a new book called Night Moves. I want to bring on Jared Dillian, editor of the Daily Dirt Nap. Welcome, Jared. Good to see you again.
Yeah, thanks for having me.
Wait. Before we get started, I had a question. You got a new book, and I want you to just right off the bat, you got to tell me a little bit about it. But before you tell us about it, I want to ask what it's about because the title is Night Moves, and I do happen to know that you are a DJ, obviously at night. So, does this have to do with trading? Does it have to do with your DJing, or tell us a little bit about it?
No, it has. Here's the book, Night Moves and Other Stories. It's a collection of short stories. It's 16 short stories. It's named after one of the stories is called Night Moves, and it's about a DJ and producer who lives in a nice neighborhood in Miami, and he has an affair with the mom next door. Okay, and it's incredibly well done. No, I mean this book takes all the stories take place in different geographic areas, different times over the last 30 years. It is, I mean, this is some of the best writing I've ever done. So I highly recommend picking up a copy of Night Moves. And I realize getting somebody to buy a book is like getting them to climb a wall of indifference, right? Like, a book doesn't cost much. It costs like 17 bucks on Amazon. It doesn't cost much, but it's like 6 hours of your time, and this is another thing to do and whatever. Do not have contempt prior to investigation. If you start reading this book, you will not be able to put it down. Like I actually had people texting me like I'm reading one short story a day so I can savor it, right? So it's really, really good. You got to get it. Night Moves.
Well, as a trader, Jared, and you can sympathize with this. I have great periods in the market. I have drawdown periods in the market, and whenever I'm in a drawdown as a trader, uh, I like to sit down and start reading something because it keeps my mind off the markets. I can sit at my desk, look at what's going on, but I can focus on something else and something to pass the time while I'm waiting for a good next juicy setup. So instead of waiting for that next juicy setup, maybe I'll be waiting for that next juicy story in Night Move. So
Oh
how about
yeah, very good.
that?
Very cool. Thank you.
All right. Well, Jared, it's really nice to have you back here on the Trader Summit. I do want to ask you a couple questions because the last time you were here was back in May, and in May you talked about the private equity space, and you were extremely bearish. And I'll go over to an ETF, an Invesco ETF, showing what's really happened in the space. And I know it's a long time between you know May and here we are five months later. I'm not sure how you're navigating the space, but tell us a little bit about how you're feeling about private equity, and is it still hot on your radar right now as from a short side point of view?
Yeah, I mean, I'm still short. I have vaporized a lot of put premium, let's put it that way. That you put up the chart of the ETF that run up most recently is because of interest rates. Rates came down quite a bit, about 1%. Lower interest rates are good for private equity because private equity is buying companies with leverage. So that has been a little bit painful in the last couple months. The thesis is still intact. Private equity is a bubble. Blackstone actually pre-announced last week, and it was not good. So the stock is 7-ish bucks off the highs. So I look. I don't know what the cat. I when I put on a position, whether it's long or short, people always ask me what's the catalyst, right? I don't know what the catalyst is going to be. I have no idea what the catalyst is going to be. All I can tell you is that it's a bubble. Uh, Private valuations are too high. There's too much leverage. You have all these guys with their fleece vests or running around New York. It is an investment mania like any other investment mania, and it will end. The problem with private equity is, LPs are locked up for 10 years. So, I mean, in the worst case scenario, I mean, you're already starting to see returns come down. Returns are coming down. You could see flattish to negative returns over the next 10 years. And if there are no redemptions, then they could just earn their way out of it. That's a possibility. but I'm still very bearish.
All right. Well, that's it's good to hear. And I know one of your most recent pieces was really focused on private equity again, and that's why I asked. Now, Jared, a lot, like I said, a lot's happened between the last time you and I spoke. Most prominently, is we've gone into this easing cycle in not only from the Fed but other central banks. Aside from the Bank of Japan, I guess is the outlier here, as you'd expect. But this has really kept, in my opinion, it's kept equity markets, pinned to these all-time highs. How do you see it shaking out? And do you think, and I guess as I'm asking this question, I'm going to ask two parts. How do you feel this is going to end up, and where do you think rate expectations are going to be moving forward? Because they're pretty aggressive from the market's pricing, looking forward, expecting the Fed to cut quite a bit going into 2025. Are you in that camp or otherwise?
No. I think the front end of the yield curve is pretty mispriced. At one point we were pricing in 10 rate cuts out to 2025, or I guess January of 2026. 10 quarter basis point rate cuts that takes you down to 3% in Fed funds. I don't think that's going to happen. Today, we're talking today. Today is Thursday, October 3rd. We got ISM services was a blowout number, an absolute blowout number. All the data, it's funny, all the data has been strong recently. We have payrolls tomorrow. Expectations are very low, 150,000 jobs. If we beat payrolls, I think the bond market is massively mispriced. So what I think is that the Fed is on a predetermined path. They are cutting. And it doesn't really matter what payrolls or any of the data say. They are cutting no matter what. And I think they are trying to get rates back to some neutral level. So if you think 5.5% Fed funds and we had 2.6 on CPI, that's like 3% real rates. So they're going to try to get real rates down to about 1%, which means you get Fed funds of about 4%. And I think that's as far as they're going to go. So, if you could place a bet that the Fed is only going to cut 6 times instead of 10 times and hang on to it and withstand all the volatility over time, I think that would play out.
Okay, well, it's going to be interesting. I feel like it's almost a repeat of last year when expectations were way out of whack going into the end of the year. But we have something special that's upcoming. I say special in the nicest terms. We have a U.S. election that we're just several weeks away from. How do you think the market is going to react between now and election day? What are your initial gut thoughts and instincts?
Well, the election is basically a dead heat, right? And I think if Kamala or Trump, if either of them were pulling away, you would start to see trades develop in certain parts of the market. But it's a dead heat, so you're not. So there are Trump trades and there are Kamala trades, and there's trades that work for both of them. Like, honestly, Stan Druckenmiller was talking at the Grants conference the other day, and he said that we have bipartisan fiscal recklessness in that 15 to 20% of his portfolio is short bonds. Doesn't really matter who gets elected, the deficits are going to get bigger. You're going to have more supply, especially in long duration stuff. It
Sure.
means higher rates. I think the whole bond market is mispriced. The front end, the long end, it's all mispriced. I want to be I want to be betting on higher rates across the board.
Okay, and so not only from the short end but the long end as well. And so let me ask you this: is higher rates, are we going to be able to equate that to a stronger dollar, especially with this? We could say fiscal spend is going to continue to increase, maybe not as rapid as a rate in this last term, but maybe not. But how do you think the dollar is going to react here?
Well, the dollar is bouncing. It started on that ECB, that European inflation number. That was a really big number. I think dollar yen is going to continue to go higher. I think the yen has topped at this point. The way I look at it is the dollar is going to get a very big technical bounce, a very big technical bounce. My view is still structurally short dollars. especially if Trump gets elected. If Trump gets elected, I mean, you've heard JD Vance talk like they want to trash the dollar. So I think you get a big bounce in the dollar until the election, and then everything changes. So.
And so, I mean, the dollar and we've had a really big bounce from support as it is, and you think it could probably extend and stretch its legs even further then.
Yeah, probably up to the 200 day.
Okay.
Yeah.
All right. Well, let's let me ask you one last question before we go back to night moves. I want to ask your question on this port closure that we've had the strike that started this week. Other than not being able to get toilet paper at Costco, for those of us that have been to Costco 2 times in the last 2 days, just getting toilet paper for the house, and I couldn't find any. Aside from disruptions like that, which is silly if you ask me, because toilet paper is made it doesn't come through our ports. But anyway, that's neither here nor there. How big of a disruption is this going to be to the U.S. economy, especially if it drags out a little bit longer?
I don't know. I mean, I can tell you that it's inflationary, and this is another reason to be short bonds. All paths lead to short bonds. All paths lead to short bonds. It's highly inflationary. Um, this doesn't really market related, but one of the things the longshoremen want to do is prevent automation because they want to keep their jobs, which
Yeah.
is lunacy. So it's all very inflationary, just, to put a point on it.
Yeah, to lose your jobs to speed up and catch up with the rest of the world as far as automation goes at the ports. I mean, I guess we'll see how it works. But what you're pointing out is inflationary, bad for bonds, and also still short private equity are your general ideas at this stage in the game. Jared, before
Yep.
I let you go, I want you to do us a favor, flip that book back up towards us, please. Night Moves by Jared Dillian, obviously the editor of the Daily Dirt Nap. I'm going to go ahead and get myself a copy because, like I said, us traders, when we have drawdown periods, which we all do, I always like to have a good book next to me. So
It's a good escape. It's a good escape.
definitely good escape. Well, Jared, what's the best way for traders to follow your work and to get involved with the Daily Dirt Nap?
Yeah, I mean, I highly recommend everybody subscribe to the Daily Dirt Nap. It's actually one of the longest running newsletters out there. I have been doing it for 16 years. I have 3,500 subscribers. People rely on it. And I have the highest renewal rate in the business. 85 to 90% of my subscribers renew every year. Okay. So you can go to dailydirtnap.com. There's a subscribe button, hit the subscribe button. An email pops up, email me. If you mention the podcast, I'll give you a big discount.
And the podcast is
Your podcast.
Oh, I'm sorry. I thought you were talking about your own. Okay.
No.
Yes. If you mention Trader Summit and you saw Jared here, make sure you let him know in the email.
Yep.
All right, Jared, it's been wonderful catching up with you. I appreciate your time and I appreciate the updates on the markets and your thoughts. And I want to wish you the best of luck with night moves.
All right. Thank you.
Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.